Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel for our next topic, ThinkScript on Thinkorswim platform here. My name is Kevin Horner, and I'll be taking care of you today. Say hey to my friend James Boyd there in the chat, everybody. He'll be able to answer questions on the fly, get to things that I'm going to be unable to get to for this particular segment, but nonetheless, I'll try to do so as we continue on the conversation here. Would like to answer your questions, but I'm going to tell you right up front, everybody, ThinkScripting is one of the things with which I struggle as it relates to Thinkorswim. It's been one of those things that I've had to go through my paces, get familiar with, do some learning on the fly, and I'm a big experiential learner. So the best way for me to go through and improve my process is to actually kind of force my own hand and learn as I go. So if that's you, I'm hopeful that today we'll be maybe filling in some gaps on getting a little bit more comfortable utilizing the scripting opportunities for ourselves, and specifically the scan tool today is where I'm going to reside. And so we're going to get into some pre-built scans, and I'll remind you of a few of those. Remind you, of course, that you can build off of those preset scans as well. And then we're going to look at a few that I've created that are kind of tied to opportunities that trend traders might choose to be looking for, with some additional details involved. So hopefully that's going to wet your whistle as it relates to ThinkScripting today. I'm glad you're all with me. If you're not already doing so, follow JB and me on X. There we are available, Kevin Horner CS and James Boyd CS. It's absolutely the best place to engage with any of us coaches when we're not hosting shows for you here. So with that, let's get to our disclosures. I'll remind you that all of our conversations are informational and educational exclusively. We do not make recommendations. We do not make endorsements for a specific approach to trading the market. Now, in today's class, there will be some semblance of technical analysis, of course. It's going to be building block level stuff, though. Nonetheless, technical analysis is not something you should rely on exclusively for your decision making. We believe there are a multitude of factors you want to consider when placing your trades. So please do the same. Set a level of those. Know 2, 3, 4, 5 different things that will aid you in making those decisions, and try to rely on them in aggregate as you go through your trading process. All right, so we're going to dive right into things. I've got some notes today, so hope you'll bear with me as I kind of work through the scan tool and getting a little bit familiar with incorporating some of the understanding of how Thinkorswim thinks. And I think that'll aid us in building and utilizing some of these scanning opportunities within the platform. Now, I've got the chart of the S&P 500 up as we enter the final hour of trading for the day. It did start maybe a little bit green, but we've gone deeper into green. As you can see, that candle at the moment tells us that we are trading essentially at our high of the day, and we have once more pushed into this 6760 area, or 67.5, 6750, somewhere in this range, and looking for a breakout. Now, tomorrow, we could find tomorrow to be a bit of a slippery day. You never know how a Friday is going to go, but certainly moves through the recent highs, the recent all-time highs at 67.65. I'll remind us, are not bearish in nature, right? We don't discourage new highs. Typically, those are considered bullish. So that's one of the things that JB and I likely will be looking to discuss first thing tomorrow morning for Trader Talk, and that, of course, is a live-only session for those of you interested. Remember, Fridays, live only. Getting a strong move out of the NASDAQ 100 as we get into the final hour as well. Very, very similar looking chart. But as you can see, we go down to a little bit more of these deeper groups, not as large groups. You're going to see the Russell 2000, our small caps, with a bigger move today, 1.5% up, and our semis up about 2.5%, getting a bit of a lift here today, a nice strong push. So nice test of the 20-day moving average there if you're a trend trader. You may not have expected it with yesterday's price action below the 20-day and then closing above it, but that's kind of the testing of a moving average that many traders are looking for. In fact, when I think of trend trading, and I'm sure I'm not alone, going to likely look at the time frames that fit for the type of trade I'm considering. So if I'm a short-term trader, I might be looking, for example, at the 20-day moving average. And if I'm an intermediate-term trader, I might be thinking about the 50-day moving average. And of course, you've got the 200-day as well. But I'll tell you what, when you look at what the semis are doing, what the NASDAQ 100, what the Russell, the S&P, they are all remarkably higher than their 200-day moving average. So at the moment, at least, if we're looking for trend trading opportunities, I think many traders are falling into those two main windows of time, 20-day, 50-day. Now, I know JB will certainly talk about a 10-day moving average as well. And that's one of the things that I'm going to remind you about up front here as we go through some of these scan options available to us. I want to encourage you to take the opportunity to play with these criteria yourself. Get them set so that they meet up with your preferred approach to trading. It's very, very important, and you can go through this process, save yourself a lot of steps by simply saving your scans, renaming, and linking them up together so that you can really go through your process consistently each trading day of the week. Okay, so with that, let us do this. Let's take a peek at the scan tool. And the first thing that I'm going to do, I'm going to go ahead and expand all of this. I'm going to clear this out by loading a brand new query from the personal list. I want to see if this one's in my list. It might not be. I'm going to have to, I may have to load this one up, but this is one that was coming originally from the former Street Smart Edge days, way back when. We'd in Schwab here, we've been utilizing our Street Smart Edge platform, and one of the scenarios or one of the scans that we utilized was uptrending stocks breaking out with increasing volume. And I wanted to highlight some of the thought process in this here and what this is designed to do. So I have loaded this one up, scanning within the S&P 500 exclusively, and looking for stocks in positive trending scenarios. So, but we've defined that with a 15-day simple moving average being greater than a 50-day, step one here, right? And then step two, looking at relative strength. Here, utilizing the relative strength index, the RSI, the indicator, the oscillator you frequently will see me utilize on our charts. That's what we're talking about down here. And we're talking about the default here, which is a 14-period default, all right? On the scan, what we've asked for is a 10-day RSI, just the last 10 trading sessions, versus the 30-day RSI, okay? So what you're looking at is a 2-week period versus the 6-week period. And the idea here is strength in the trend over the last 2 weeks versus strength in the trend over the last 6 weeks. If that's improving in the last 2 weeks in combination with our improving volume as well, and moving to new short-term highs, then we should be looking for stocks not just breaking out, but breaking out with some conviction. That's the concept here. So beyond our RSI, we've got average volume. Here we're looking for a 5-day average volume, much like we were talking the RSI. We're looking for shorter term periods to give us a heads up that something may be underlying this move or be setting up for the potential of a move in the near term. And so we're looking at the last 5 days of volume and trying to get average volume to be greater than the average volume of the last 20 trading days. All right, so we're just looking at last 5 days versus the last 4 weeks. If the last 5-day volume is greater than the average volume of the last 4 weeks, then we've got a tick on that chart or on that side of things here. And then our last is simply last trade or close being above the highest high from yesterday. So essentially moving to new highs, okay? So that could be opportunity. When I do a scan here, you'll notice I've got five, I've got about, no, I got nine. Looks like 9 total opportunities. And so now that I've built that into my scan, I'm just going to open up my watch list or my gadget zone over here. I'm going to launch a new watch list, and I'm just going to link it up with my chart, and I'm going to launch this new watch list. But first, for preference, I'm going to make sure it's there, and I'm going to make sure it's got all my criteria. So I'm going to save scan query. All right. And then from here, I have a pop-up window, right? There it is. So it's going to stay the same unless I wanted to make any alterations to it, but I just want to save that so that I can, and override. So when I come here to my personal drop-downs once more, so I'm going to find uptrend breakout with, oh, did I title that wrong? Uptrend breakout with increasing volume. There we are. All right, so I misspelled it here. I'm going to have to delete that one. But down here, everyone, uptrend breakout with increasing volume. And again, note the target. The target tells us we have a dynamic watch list. And that's really what we're doing. What's great about this, of course, everyone, on a day-to-day, intraday basis, if you start your morning like this, that list is not static. That is a list that will update as the stocks become, as soon as stocks meet the criteria of your scan, they get added to the list. If they suddenly no longer meet that criteria, they fall off that list. You can even tell the platform here to alert you when the scan results change. All right, so just say, hey, yeah, tell me what's up. If a symbol gets added, do this for me. If a symbol gets removed, do this for me. Some of you would use this as just a notification audibly, for example. But I wanted to point that out. So with this in mind, just quickly, looking through these symbols here, I'm hit APH. I'm looking for stocks moving to new 20-day highs, not necessarily highs on the 1 year daily chart, but just new highs on basically the last 20 days, okay? And so here we move on from APH down to Charles River. That's a new high, and we expect to see, volume here looking a little bit more defined, and you can see that the volume in here is certainly bigger spikes here over the last few days. So just to give you a few indications, some stocks maybe you haven't seen in a while, and I'll tell you what, you're going to find a few of these stocks on a few of the lists that I'm bringing to the table today. So I'll remind you that while the scans that we talk about are educational in nature and the symbols that we're relying on are essentially examples, there is validity nonetheless to the concept. And again, I want you to take away maybe not necessarily the individual symbols that we come across today, but rather the process that can absolutely lead you toward a more refined approach to locating your own trade opportunities. So the Halliburton one is kind of interesting here, right? You can clearly see bigger spikes down below in volume of late, right? And so we know we've got an increase in volume. You've got a stock moving to the highest high it's had since all the way back in February. So you're not just looking at 20-day high here, everybody. You're looking at an 8-month high in HAL after having broken a long-range downtrend via my white line. Not to mention all three of the major moving averages, the 20, the 50, the 200 moving upward all of a sudden. In fact, the 200 is starting to flatten out, which is really difficult for the 200 to do, right? Pretty interesting scenario. But, traders, you're always looking. Tell me all the time, hey, I need to find those opportunities when things start to turn the corner. I'm looking for the chance to get started when something has maybe started to fix a downtrend as opposed to waiting for these longer range trends to play out. So we're all different traders though, right? That's the key. Hopefully our conversations here help to remind us all of that. I see we've got a survey in the chat already. Hey, take a second there. I don't get to do this segment very often. And with this, of course, is Mike Fairborn's class, and he's just about wrapping up his time away in the month of October. So you'll have him back soon. But would love your input nonetheless, everybody. If you'll take the minute to give a score or a comment, I'll take the time to read them. So I'd appreciate that feedback as well. Okay, so there's your initial or your first scan that is a scripted scan. And of course, because I am trying to, as best I can, help all of us out, I do want to encourage you once again, make sure, play with these criteria, customize this criteria. I think you'll find that the more you work to just make minor tweaks in your scanning and your scripting, I think you can learn quite a bit along the way. So I'm going to share this scan with you all. Again, this one is titled Uptrend Breakout with Increasing Volume. And I will verbally remind you that, of course, that our scans, scripts, etc., anything that we share with you in this way, these are not a recommendation for use. These are not guaranteed for accuracy. They are also not guaranteed for timing. Just far too many variables involved there. So, all right, let's keep going. Good starting spot there with uptrend breakout with increasing volume. The next that I hear often about from many of you is a desire to find something that can highlight so-called Cahold moves, right? What's a Cahold move? A Cahold, C-A-H-O-L-D, close above the high of the low day. Now, what this simply means is we're looking for stocks that are in an uptrend that have pulled back to an area of support and are suddenly now moving off of that area of support and start to reassert their uptrend. All right. And again, I'm leaning into bullish examples here, but that does not mean you can't flip these around pretty easily with just a few tweaks on your own. So I'm going to load this 20 DMA, 20-day moving average Cahold scan. Let me see if I've got it properly in my personals here. Okay, I do not have it the way I'd hope. So I'm going to take it from another location. I've got it, I got a script and I'm going to copy paste. So this will also be a quick teaching moment, everyone, for how to load your scripts into Thinkorswim as well. I have placed this script on my notepad with a Control C, of course, and I'm going to go to Setup and Open Shared Item. I'm going to Control V here and hit Preview, and it gives me Scan Query. Now, this is important because I think if you simply hit Import and see Scan Query in today's date, you're not getting the whole thing, right? So let's make sure we make this really simple on ourselves. So we're going to say 20 DMA Cahold. This way, when I find this scan in my dropdown, it's going to be easy for me to recognize. So I'm going to import that, and it automatically loads it in a separate new scan window, fully detached and ready to go. I'm going to close it, and I'm going to go right back up to my little hamburger or action menu, stack of pancakes, take your pick. I mean, most of you know that if in many days it's going to be maybe that looks like a 3-stack of tacos for me. That's right there. Absolutely perfect. I love that stuff. So anyway, here we're going to go to load scan query, or load scan query, personal, and there's my 20-day moving average Cahold. Now, let's talk about how this one's built. Starting off very basically, of course, I'm in the S&P 500 here, and I want to look for stocks that are at least $10 a share, no maximum price. I've incorporated average volume, 50-day simple moving average. That's at least 1 million shares. Why? Because I want to be a small fisherman in a very big ocean of players. I want to participate where all of the trades are. I don't want to get locked into a low volatility trade. I want to be able to enter and exit my positions, and you need volume to do that. I'm going with 1 million. Needless to say, y'all can choose what you'd like. Yeah, I see you, Will. I knew you liked that taco comment. Okay. Going back to our basic studies now, I'm going to open this up with the pencil. Now, this is where it gets to be a little bit fun. But this one, I think you're going to find, and I appreciate that, Thea. Yeah, you're right. I've done this before, but I'm going to show you some smaller or additional customizations here that I think will help you out. So yes, we're talking about finding stocks that are already trending, right? So we've got the simple moving average, the 20-day greater than, I'm going to extend this so we can read the whole thing, 20-day greater than a 50-day, 50-day moving average greater than a 100-day. The close or the last trade is from yesterday is less than the 20 simple moving average, but today's last trade is greater than the 20-day simple moving average. Today's close also needs to be higher than the high from 1 bar ago. Okay, very important we get them all. Okay, that's our Cahold definition. We must have a stock that is at this time. Now remember, during market hours, everyone, that Cahold, that C in Cahold becomes a T. It's trade above the high of the low day. Okay, that's a minor difference, but it could be impactful. Some of you will want to get started on a trade above the high of the low day. Others would be less confident and want a close above the high of the low day. Please keep that in mind. Now, I'm going to go ahead and save all of that into my, so that's just my basic detail right here, the study. So I've instead of having 10 layers here, I've got them all defined. All of the study customizations I made, they're all defined under the condition wizard, okay? So with this, oh, good question, Jim. What is a bar? The bar is basically the 1 day, okay? So when we say 1 bar ago, we're talking yesterday, okay? If you're talking the current bar, it's the same as a bar equals candle in this regard, okay? So we're going to look at this standard 20-day moving average Cahold. Let's hit scan, and let me see. Am I sorting through? Nope, I've got no intersections and I've got no exclusions. But bear in mind, this is absolutely something you can choose to do. Incorporate those as well. So now let's go back to my. I've got this saved as 20-day moving average Cahold. I'm going to change this drop down, my watch list once more, to 20-day moving average Cahold. There I go. And now that list is ready to go for me. And I'm going to go back to my charts, and I'm just going to start to do what I enjoy, chart triage, right? Looking through these charts one at a time and using my the involuntary response that my body wants to give when I see some of these symbols. Because some of these symbols, well, certainly in my case, you know, I just took 10 days off. I can definitely say many of these symbols are not popping up in my recent memory. So I'm going to just work my way through these. I like to use the arrow button. Notice here, test on Arista hit the 50-day at the low yesterday, and we're already through the high of that yesterday. So is it a perfect scenario? Are we trading above the high of the low day the day it happens every time? No, of course not. But what we are seeing is the potential that we could be catching that stock making its move on its first move through the high of the low day. In many of these cases, it's going to take a few days or weeks to play out. And I think Arista is an excellent example of that, right? Because we had the clear Cahold. Let's see, clear Cahold probably here. And you know what? You probably felt great until the very next day on the intraday lows. We're right at support. And I'm sure somebody's sitting there going, man, I was thinking that a Cahold was only going to lead to upside. I hope the takeaway is it's not always the case, right? But that's what we're trying to accomplish. Finding stocks trading above the high of a low day and doing so at an area, in this case, an area of import, the 20-day simple moving average. So let's go to Newmont. Below the 20 yesterday, above the 20 now, also above the high of the low day being yesterday. This one's actually happening as we speak from an example standpoint. Pretty much what we were hoping we could get from this one, okay? So this is pretty intriguing to me as well. If you're looking for opportunities, remember, we can't simply sit on our hands and decide to look at these, you know, once a week or every other week. I think this is a great reminder that we have to have these ready to go, okay? Some days are going to be great for, 20 DMA Caholds. You might want to play with a scan and make it a 50-day moving average Cahold, all right? And how hard would that be? It wouldn't. What would we do? I mean, I'm going to go into the condition wizard. Let's just make an alteration here that'll make this pretty simple. We're going to go ahead to the close from 1 bar ago is less than. This is the very first one that assigns our moving average. I'm going to change that length from a 20 to a 50 right here. Okay, so our close is above the 50-day. That's what we want there. And we also want, right here, close is greater than, the close from 1 bar ago is less than the 50-day, excuse me. Close today greater than the 50-day. So I'm going to update this one here to 50 periods. All right. And again, same thing. Close is greater than the high from 1 bar ago. Need that in there as well. So here I'm going to hit OK. Here I'm going to resave this scan, but now instead of the 20 DMA hold, I have it as a 50 DMA hold. And again, I'll remind you, you're going to get some of these same securities. So let's scan for it. There we go. And real quickly, we see right off that some of these are in there. There's Apache or APA. There's Win. There's XYZ. Okay, so you got a few, but they're not all the same. So let's change this real quick. Let's go to the 50-day. There we go. Now to my chart. Here's Apache, APA, back above the 20, but it was below. Notice how yesterday it was below the 50, right? Today, right above it. Oracle, right at the 50. Very notable. Is it above the high of yesterday? If yesterday is the low day in this pullback? Yes, it is. How about State Street? Same thing, closed below the 50 yesterday and traded through the high of yesterday and above the 50-day today. Okay, so this is fairly intriguing to me. But I think where we're going to have a little bit more fun is as we move to something that was coined for me quite a while ago. Oh, yeah, of course I can share these. Let's go ahead. Sorry, everybody. Let me do that for you. So here again is this one. I will share. This is, and remember, when you open it, title it. Okay. This one is the 50-day moving average. Okay. 50-day hold. That's this one. Again, not guaranteed for accuracy, not guaranteed for timing, not a recommendation for your use. I'm going to do the 20-day for you once because I didn't share that one. I shared the uptrend breakout, now the 50-day, so let's share the 20-day. Just to limit, again, I would love it if y'all would play with these a little bit yourselves, see to what extent this matters in your work. But I think more than anything else, having seen it done and having a willingness to play with this criteria is probably the first thing that we need to do. You have to be willing to play with it. You're not going to break it, okay? It might frustrate you. I've been there, okay? But I still think it's worth it. Okay, now we're going to go next to something that a long ago friend of mine coined, and that's our man Lee Bull. Referred to something, basically confirmation as the Horner rule, calling it something that gave me confidence, which was defining confirmation as a number of days consecutively trading above or below support or above resistance, right? And the idea being very simply, we want to validate a move. And so some traders would say, you know what, if this stock fell through an area of support and it didn't immediately fall X percentage, they still might be bearish or negative on it if the stock closed for 2 sessions in a row or 3 sessions in a row below a certain price level. That could be considered to be confirmation. So that's where the so-called Horner rule came from. And I want you to focus on that, not the number of days, but the idea that you're defining confirmation. What is that for you? Is it 1 day below a price level that says that's enough, I got to move on? Is it 2 closes in a row? Is it only 2 closes in a row? Or can I get if one of them is above the level of support and then I'm right back beneath it, does that invalidate it? I don't know, because that's your process. But that's what I want you to be thinking about, okay? So I'm going to load what is called the Horner rule, utilizing the 20-day moving average. And oops, I've got to make sure I bring the right one in here. I apologize. So this one, here we go. Open shared item, preview. All right, and we're going to import this as, we're going to title this. Oh, is this one ready to go? Well, it doesn't want to let me title it anything else. So we're going to call this Kev's Thursday here, okay? All right, so we're going to call this Kev's Thursday. I'm going to import this scan. Yes, I want to overwrite it. Thank you very much. And then it went ahead and launched it. Now I'm going to go here, load it. Kev's Thursday. There we go. All right. So here is where we get a little interesting on this one. And this is designed, again, to let us know that we are getting price action validating a move. In this case, working against the 20-day moving average for our period of support, okay? And so a lot of what we saw from the hold is in here as well, right? A 20-day moving average above a 50 above a 100, the close today greater than the high from yesterday. All of that makes pretty good sense, right? Today's close greater than the 20 simple moving average. Cool, all good. But look at this one here. I'm going to edit this closing period from 1 bar ago. And so here we want to see again, close is less than the 20-day simple moving average. Okay. But we also, why did that? I could have sworn, everybody, that loaded something different for me. I'm going to have to apologize in advance because that's why it wasn't making the sense that I was expecting it to make. So here, my goal was to highlight that we are looking as well. I'm going to go ahead and let's see if we can edit this. Let's add our condition. So we're going to be looking for a close from 1 bar ago that is greater than the 20-day, whoops. There we go. Study, simple moving average. All right. So offset by 1 day greater than the 20-day simple moving average. Okay, so just we can see that. The close greater than the 20, and then we can add the exact same with 2 days. So close greater than the simple. Oh. And 20, and then 2-day offset. And so here the idea is, again, are we above the moving average for a number of consecutive opportunities, right? So the scenario here, at least the one that I was planning for, was the idea that we want to see it above that period for multiple closing windows, right? Multiple days. And so we can play with that by adding in closes greater and adding in from 1 bar ago, from 2 bars ago, from 3 bars ago. So here you're basically stating today would be offsetting only. Now, Chris, I'm going to ask you, I guess we're going to answer that question when we see the results. Because if the results come the way that I'm expecting them to, then my answer would be no. But if I don't get results from the screen or the scan here, then I might feel differently about that. Let's see if it's what it does here for me. If I can get anything from my scan. There we go. Okay, so let's do that. So this is scanned as Kev's Thursday. Let's change this to Kev's Thursday. There we go. All right, so what did we not look at? We didn't look at XYZ. So here's block, this rectangle. All right, so we are working against the 20-day. Now here, this one is close, right? Close here, 75.92 yesterday. And the 20-day is 76.14. So no, evidently there is a misstep in my work that has led to us capturing XYZ, because I would not have expected it to make the list in this case, with it being below the 20-day at the close yesterday. So I'm going to play with that one because, again, I had it. Man, I'm disappointed. I had that one built. So let me see here. I'm going to try to answer your question, Tam and Honey. When you go to import the scan, are you copying the script itself, or are you clicking the script? Clicking the script does not work. So we want to simply copy the script and then place it in the setup, and then open shared item, hit preview, and then import. Okay, so make sure that we're doing a copy paste rather than a click through. Click through will not work, unfortunately. Let me see here. What I want to do in this case, I would really like to make sure that I add in a script that will be kind of combining the details. I know what you're dealing with, Tam and Honey. You're probably working on our paper money version of this Thinkorswim desktop application, and I think that that's likely why you're running into trouble. So bear in mind that the scan tool, unfortunately, is not activated across the board for the paper money version, and I think that's what we're running into there. So I'll apologize for that up front. Let's see. I am going to try a little bit of a trick here, everyone. Yep, there you go, Tam and Honey. Yeah, exactly. I'm sorry for that. The scanning is specific. So once we get you into the live version, what you can do, interestingly enough, at least, is utilize it in live. And while you can't utilize the dynamic watch lists necessarily, you could utilize the watch list that you create from the live version, and you can save and access that in your paper money version. So that would be available. Now, what I am going to try to do here briefly, if you'll bear with me a second, I'm going to try and load this, the version of the tool that I was working in before, when I was basically doing all my pre-work with all of you, because I do want to highlight here and the opportunity for the scan detail that I wanted to show you. So if you'll bear with me just a second while I pull up some of this information, I would be greatly appreciative, because I was so excited to do this. Let me see here. All right, I'm going to do this, and I'm going to go here, here, here. Let's go over here. All right, so I am going to take... Okay. All right, bear with me, everybody. I appreciate your patience with me here as I try to figure out which of these versions is the one that pops for me. So, yeah, well, I thought that was going to work, and I'm wrong. Boy, well, here's my plan, everyone. I think what's going to happen next is that I am going to have to do basically an update for what I wanted to highlight here, because the one thing I wanted to show you today was to take an existing version of the Thinkorswim platform and basically, oops, let's see here. Oh, I think I got it. I think I might have it. Bear with me one more second, everybody. I appreciate your patience here. I know this is a little out of character because I wanted to teach on this one corner rule concept and then take that corner rule concept into another scan. You're not kidding, Ricebird. My goodness. I absolutely need a taco or 6 right about now. I'm going to take that here. All right. So I think, let's see. Think I might have what I need, everybody. Gonna bring this up. All right. Is that the one? Ha. All right. So in our final couple of minutes, let me go ahead. I'm going to add this. There we go. All right. So this is corner rule. Corner rule and Cahold. 20-day. Okay, so here we go. Get that one loaded. Here's what it looks like, everyone. Again, taking stocks in their 20-day, or excuse me, above their $20 price. We have gone to a custom screen, so a custom scan here. And this is where I really just wanted to highlight this. So this process, and this is one of the small things that I basically worked on condition-wise, was adding in another day. So here, this script is built and defining what we're looking for. We've got the 20-day simple moving average and a close above it right here, right? So closed above the 20 today, SMA 20. Close number 1, we defined close above yesterday's 20 DMA as close 1. Close above the 20 DMA from 2 days ago, that's close 2. And then we can add a third one if you're looking to take a third consecutive day as an example. So what I'm going to do here is I'm going to take this, everything from the def line, right? So I'm taking def all the way here, okay? And I'm going to copy paste this. So I'm hitting Control C. Now I'm going to the end of this string after that semicolon, and I'm going to Control V that thing. Now, notice it pops in red. That lets me know that I have messed something up, right? And that's because I've got the same coding in twice. So I'm going to change this def close above 2 days ago to 3 days ago, and it equals close, not 2, but close 3. So when I click off of it, give that a second, it's supposed to go ahead and change. Come on, guys, let's go. I know it did. And okay, close above today and close. Oh, and I got to do and close above. So here we go. And whoops. And close above 3 days ago. And then, that right? Let's see. Oh. And oh, that should have held that, everyone, up right here. There we go. So as you can see, I'm a learner and I'm going at my look at you guys, you're on the ball here. I appreciate you getting in and engaging with me and letting me know where I am making my mistakes. This is helpful to me. I hope it's helpful to you. All I did was just told the platform that I wanted to add a third consecutive day for closes above my 20-day moving average. And I hope at least it was kind of evident that we could add a day 4 or day 5 if we were looking for such confirmation. So now it's set for essentially today and 3 additional days back after having traded through the 20-day moving average. Let's go ahead and run the scan. There's going to be quite a few. So there's, wow, goodness, that's a lot of stock. That is far too many. So let's do one last trick. I'm going to take this and I'm going to take the coding, close it out. I just copied that code. Okay, just copied that code. Now we can go in and go to, let's say, let's go back to the 20-day pullback. This is a slight, hey, slightly different than what we could even go to the 20-day hold. Let's go to the 20-day hold, which we've already done, right? We've already talked about it. We know what that looks like, but I've added all of that other stuff, right? So we've got a 20-day moving average hold test. What about adding in the last condition that I just copy pasted? So, oops, I don't want to hit that. I'm going to cancel, and then I'm going to ThinkScript editor, copy paste, Control V, and I'm hoping that it adds that in. There we go. Hit OK. And so now what I've done is added that to my general criteria here so that I can hit scan and I can play with that additionally. So look, ultimately, my hopeful takeaway for all of you today is this thing is going to take some time, and playing with this is my process. If it's your process, I hope today was helpful. I would love to hear from you, everybody. Use that survey in the chat. Let me know your thoughts, in particular, where I can be better at this. I'm pretty sure where I can be better in my eyes is going to line up with your eyes as well, but I'd love to hear from you. Thanks to JB in the chat. Follow us on X. Hit the thumbs up if you like the conversation, but your feedback in the survey is greatly appreciated. Meet us tomorrow morning at Market Open, everybody, for Trader Talk in today's market. See you then.